Then I'll turn it over to Brett for the safety minute.
All right, so we talked about doing a safety minute and a cool moment at the beginning of the meeting. One, because safety's first. Two, cool moment is something that we've been talking about from a morale standpoint, and just so that directors and our membership are aware of some of the comments that we get back from a day-to-day basis. So we're going to implement this into my staff meeting, and the plan is we're going to implement it into the board meeting. So first one from a cool moments, we had a Facebook post that says, "Thank you, we love serving our members." Basically, this person said, "Your staff is very nice and helpful. Great job." And then the one on the right side, we did a post that shows some work that is being done in front of a member's business. It says, "Great job, guys." And then back in, when was this, June, we got a letter that basically talks about they had an electric service move, so they wanted something moved. This was out the lake. They arrived a little ahead of schedule. They were prompt and efficient in their work and had our electric service moved and completed in just about an hour. I sincerely appreciate the excellent work, which allowed our contractors to resume the renovation of the lake house. Please pass this along to all the crews and everyone who was involved. So cool moments again. I thought those were kind of neat. Next is the safety minute. We talk about safety here quite a bit. It's a big piece of our job. I had a meeting with John Cray last week, and I thought this was good because there's a human element in making sure that you have a high-vis vest on. He made a comment that Brian does a very good job of putting on his vest as soon as he gets out of his truck and he's on the work site. So we brought this to attention to everyone, and high vis is a big deal. The new state law went into place where you're not allowed to be texting and talking on the phone, but we know that folks do that. So anything that we can do to protect our crews or any of our folks that are out on the job site, to me, is important. So I thought it was kind of a good attaboy to Brian as far as wearing his high vis. So, questions?
Okay. Next, I need approval of the minutes. Are there any comments on the minutes?
So moved.
Jason, second.
Second.
Steve. All in favor? Aye. All opposed? Okay. We will move on to our audit report then. Sorry, I didn't.
I'll introduce myself.
So,
Good evening. My name is Joe Bozen. I'm with the CPA firm Roshine Company out of New Albany, Indiana. We were hired to do your financial audit, I think, for this year and in the next 2 years. We did your audit for a whole lot of years. I can't tell you how many. I'll say at least 15, probably until about 3 or 4 or 5 years ago. I think there's new board members now and some new people in management, but we've been around this co-op in the past. I guess with COVID, there's been a lot of firsts for everyone, but in March I did my first virtual presentation ever, and if I've ever been filmed before, I can't remember that, so that's the first one. We audit about 12 of your colleagues throughout Indiana, mostly cruiser systems. We do a couple of walk-up systems. So we've been around the industry over the years. Everybody has it on their iPad or has a hard copy, or everybody, one has one. Okay, I'm going to start in on page 3, and you'll notice we have a draft stamp on it. As far as I'm concerned, it's done, but it's probably still a draft until you guys approve it. We'll take that off, but I don't know of anything that needs to be done. Up at the top of page 3, it says Independent Auditors Report. Key word there is independent. That's what Roshine is, that's what I am. We're not involved in management. We don't have anything to do with how this co-op runs. don't owe us money, we don't owe you money, we're on the outside looking in, independence. That's huge. That is huge. Coming down the document, it talks a little bit about your responsibility. These are your financial statements. It's your system of controls. You do all the entry, write all the checks. The next paragraph says what our responsibility is, and that is we audit. So we're not doing bookkeeping, we're not writing checks, we're not certainly not signing checks. We are auditing. We do say in that paragraph, though, that we do not audit Hoosier Energy. And Hoosier Energy is huge to you guys, financially huge. Your investment in Hoosier Energy is almost $16 million. That's your share of their margins that they haven't retired. And that's your second biggest asset. We'll see in a few minutes that you put your share of Hoosier's margins on your books, and that's about 48% of your margins for this year, and I'll show you that number in a few minutes. So Hoosier is financially relevant, significant to you. So we say we don't audit them, but if you read it close, we find out who audited them, and we get a copy of that audit report, and we make sure it's done, and done right, since it's so significant to you. Okay, top of page 4, where it says opinion, it passed. We call that an unmodified opinion. That's a clean opinion. The last paragraph on page 4, we say that we audited the most recent year and London Woody did the year before. So questions on this, on the auditor's report? Okay, well, let's jump in and look at some numbers then. Let's go into page 4. Your audit is as of May 31st. Accountants and auditors love that date. Well, they love any date other than December because we're bombarded at that time of year. So you're audited as of May 31st, so everything we're going to see is either as of that date or the year ended May 31st. And we're comparing here. So starting up the top of page 5, well, first of all, you can see down at the bottom of page 5, you got about $55 million of assets. Those are at cost. And what I mean by cost is what you paid for. The only thing that's different than cost is you've taken some depreciation on your plant. So it's cost less depreciation, but nothing gets appraised and adjusted to market, anything like that. It's cost. Now, some of your plant could be 30 years old, maybe more.
Well, yeah.
So cost then isn't what cost is now, but everything's a cost. That's the way auditing is done at this point. You can see your plant after depreciation about 32 million, just a little bit over that. This year you added about $1.3 million. I've got the exact number in a few minutes in plant, and you took about $1.4 million in depreciation in round numbers. So your net plant actually went down a little bit. Investments in associated organizations, about 17 million. Biggest majority of that, almost 16, is your investment in Hoosier. Again, that's your share of their equities. That's on your books. Current assets. These are assets that, if they're not already cash, will convert into cash in the next 12 months. Current in auditing and accounting means 12 months. So you've got cash. You've got accounts receivable, about 2.4 million. About $500,000 of that's one customer, Honda. Materials and supplies, that's your inventory. Probably most of that's out back here. Some of it might be on a job site. It's equipment, stuff that you haven't put into service yet. And then you've got other current assets. Those are pretty much prepaid expenses that you paid in advance and you write them off as you go through them. Deferred charges, 2 items there that total about $372,000. Back in 2013, I believe it was, I think you guys wrote NREC a check for about $1 million plus or minus, and the promise was you would get lower pension rates over time, and that $1 million you began amortizing it, writing it off over the average life of the employees till retirement. So that's the way the industry does it. So what's left to write off is about $270,000, and then you got about $100,000 of work plan expense. It's planning for work that you're going to do, and then you're writing it off over the life of the work plan. Questions on the assets, what any of them are, what they represent. Okay, let's look on the right side of the page, and we'll see how we've got those assets financed. So of $55 million of assets, you've got you have almost $35 million in equity. That means you financed them through rates. That's about 63%. That's probably pretty average in Indiana, maybe a tad high nationally. Indiana is known for having, all the co-ops having high equity. Talk about that later if you want to, but they all do. But at any rate, that kind of blends in Indiana. Long-term debt, about $16 million. That's to RUS, FFB, and CFC. We'll see in a few minutes a schedule exactly how much to do when we get back to it. Current liabilities. These are liabilities for which you will need cash for in the next 12 months. So you got the current part of your long-term debt, the amounts coming due in the next 12 months. Accounts payable for purchase power, that's to Hoosier. That was already paid in June. Other payables, patronage refund payables, that's where you've decided to retire capital credits, but that's the dollar amount that as of May 31st, somebody hadn't showed up to claim yet. So it's still payable for, I don't know what your policy is, a couple years or something, and you'll turn it loose. Consumer deposits, those are monies you get from consumers who have suspect credit. So you get a deposit from them, they'll get returned if they pay on time. Accrued taxes, property taxes, utilities receipts tax, and sales tax that were due that day. We'll talk a little bit more about taxes in a few minutes. Other current liabilities for interest, vacations, sick days, those types of things, some smaller things that weren't big enough to get their own line. And then consumer advances for construction. That's to a developer. A lot of times in a development, they ask you to put in infrastructure, and then you get a deposit from them, and then as it develops and sells, you return it. If they don't, you keep it for your time and trouble. Okay, on the balance sheet then, what I want to point out, we already did talk about your equity at 63%, and then current assets are about $5.4 million. Pointed that out, and current liabilities are about $4.1 million. So that's like a 1.3 to 1 ratio, which that's where you want to be. That's you want to be around 1, maybe a tad higher. You want to have enough current assets to meet your current liabilities. But we're not here to accumulate cash and assets. It's a cooperative. So 1 to 1, give or take, is good. In your personal businesses, get it to 10, 20, 30, wherever you can get it, but I think here in a cooperative, we're trying to keep it right there together. Okay, let's go on to page 6, and let's look at your margins. And again, these are for the 12 months ended May 31st. Down the bottom, net margins for this 12 months was about $1.7 million, almost $1.8 million, and the 12 months prior, May 31, 19, about $1.3 million. So starting up the top, we've got operating revenues. We can see that's down about 3% from one year to the next. I think a lot of that is a disproportionate amount. That was Honda, I think. And then we see the cost of power down, and as auditors, when the revenue goes down, you can think the cost of power goes down, because if you're not selling it, you're hopefully not buying it. So we look at things analytically like that. So those two things are moving together in our plan. Then we get down to, you can see the operating expenses. I didn't see anything that was, from an auditing perspective, I didn't see anything that fluctuated. You know, the numbers are never going to be exactly the same, but they appear to be pretty close. Then we get an operating margins before interest, about $1.5 million this year, right over $1 million last year. And then you can see interest on long-term debt. And then another subtotal. And then what we call non-operating margins, basically some interest income. And then our last line before we hit the bottom is generating and transmission and other capital credits. And again, you guys work with other cooperatives, and you put your share of their margins on your books. And again, of that 966, almost 850,000 of it is your share. So that's the big number. On the income statement here, there's a ratio called TIR, times interest earned ratio, and you come in about 3.26. That's the number of times your margins covered your interest expense. 3.26 is good because RUS and CFC wanted it 1.25 or better, so you're fine. Okay, there's really nothing on 7 that we won't cover somewhere else, so let's jump to 8. I'd like to hear you. 8 is the cash flow statement. And what we're going to do on this statement is we're going to reconcile your margins of about $1.8 million to the fact that your cash went up about $770,000. And we're just going to kind of hit some of the highlights here. So we're going to start off with margins, but we're headed to cash flow. Margins $1.8 million. Depreciation and amortization, you took about $1.5 million. Now, that's added back because you don't write a check for that. And then generating and transmission and other capital credits, that income from Hoosier, you didn't necessarily get a check for that. You did not necessarily, you didn't get a check from Hoosier for that, but it's on your books as income. So we back it off, it's not cash. Anyway, we get down to a subtotal of about $2.1 million, the first subtotal there. That's cash that came in from operations. Now, what'd you do with it? Well, you spent about $1.3 million on extensions and replacement of plant. And you did get some cash from those other cooperatives that you deal with. And almost all of that 685, almost all of it is from Hoosier. And almost all the prior years from Hoosier last year also. But Hoosier had a special retirement sometime this spring. I don't know if it was in April or May or around the COVID thing. Yeah. So that's why it's up this year. Okay. Financing activities, about $1,600 in new members. Borrowed about $480,000 from FFB. Repaid RUS. Repaid CFC. Repaid FFB. Retired some capital credits, about $545,000. That's the cash portion. That's the portion that cleared during this 12 months. So I've kind of showed you 2 or 3 different numbers. 2.1 come in from operations, from operating the cooperative. Spent about $650 on extensions and replacements, net of what you got from Hoosier, and you spent about $700,000 repaying debt. And if you put the pencil to it, your cash went up about $772,000. But if you look at the prior year, it went down some. So your cash really isn't increasing. But some years it may go up, some years down, but it's generally staying flat. I think this is an excellent, I think this is probably in a not-for-profit cooperative the most important statement or that we can learn from, because it tells, I think sometimes a member might think, well, you made $1.8 million in margins, what'd you do with it? Well, you can see here, you put most all of it back in the business. Okay, let's go on to page 9. Stop anytime you got a question. Now we're going to get into the notes. I'm going to pick up a little speed here in the notes. I'm going to let you know what's here. So if you see something interesting, stop me. But I'm just going to kind of tell you what information is here. I'm not going to read to you. Up at the top, just a paragraph on who you are, what you're selling. Nature or basis of presentation. These are in a format that the Rural Utility Service insists that they be in. And since they do, CFC and FFB do too. So your lenders are putting us through this. So if you don't like it, it's not me. It's your bankers. Okay, some information on estimates. There's always estimates in any type of, I think sometimes people think of accounting to be exact science. It's not. A lot of estimates, depreciation's an estimate. That's probably your biggest one by a long shot. Now, it's not just a guess. You've known for years how long this stuff should last, and you make adjustments and whatnot. You get some guidance from RUS, but still, depreciation is an estimate, and it's a big number. Information on the electric plant. Up at the top of page 10, some information on receivables, how they're accounted for, how they're written off, etc. How inventories are cost, they're at an average unit cost. Revenue recognition, this is all brand new for auditors this year. There's a whole lot of new regulations for businesses on how they recognize revenue. It did not affect you guys at all, had no effect on any utility that I know of, but we still got to disclose it. Income taxes. You're exempt under 501c12. You're exempt from income taxes, but you still pay some taxes around here. Let me tell you what they are. You pay a utilities receipts tax. URT is the acronym. You pay 1.4% of your revenue to the state. You pay property taxes. You pay, I'm sorry, that number is about $486,000 this year. In property taxes, you pay about $140,000 on your plant, your distribution plant. It's subject to property taxes. You got about a $2.1 million payroll, so you probably paid about $150,000 of payroll taxes, plus or minus. Federal and state unemployment, matching FICA, like any other business. And sales tax. Every time you buy inventory, trucks, whatever, subject to sales tax. And many of your members are subject to sales tax on their bills. So you're not paying an income tax on your bottom line margins, but there's a lot of taxes leave this organization and go to various taxing authorities. Okay, on to page 11. Kind of the middle of page 11, just some more information on your plant, how it's being depreciated, at what speed and whatnot. Your distribution plant, what delivers the products basically at 3%, which is about 30-year depreciation, give or take. But your automated meter reading equipment will go about twice as fast, about 5% on it. Or I'm not, you guys are. But the point is there, I think we're finding out that's not, the industry's finding out that's not lasting 30 years. It's lasting 15, 20, maybe tops. Okay, on to page 12. Investments in associated organizations. There's the exact number. You can see kind of the middle of the page here what your investment in Hoosier is. You've got some things called capital term certificates with CFC. Those are paying like 3 and 5%, that $401,000. You got an investment in Hometown Energy, that's your propane sub. Then you got an other. That's Federated Insurance, Indiana Statewide, CFC, United Utility, NRTC. Those are other cooperatives that you deal with, and that's your investment in those. Down the bottom of page 12, again, since Hoosier is so significant, it's appropriate to put a little financial snapshot of them here. So we disclose what their assets are, what their equity is, and what their net margins are. And you got to add 3 zeros to those numbers too. Who's the Hoosier director? Okay, over on page 13, talks about your patronage capital, the fact that you're a cooperative and you're assigning your margins to your members. And then you've got some other equities, talks about what they are. They will be growing, I understand, as you, other equities will be, as you retiring capital credits and you don't find a taker, nobody cashes the check, you're not reallocating it, you're going to be putting it in this section of equity. So that'll be growing in years to come. Over on page 14, your long-term debt. It's a breakdown between RUS, FFB, and CFC. You can see the numbers. Discloses the interest rates or interest rate range. The very top item, RUS Advanced Payment Account, that's, you see negative because you've actually paid some money into that and you're earning 5% interest on it. And that's going away sometime, all right?
This month.
This month, okay. I was going to say soon, but yeah. Okay. And you guys don't have a whole lot in it, so it's not a big impact. Down at the bottom, or kind of at the bottom, you can see a row of 5 numbers there. What's got to be disclosed in any audit report is how much of your debt comes due in each of the next 5 years. So that's your principal payments that come due, and how much. Down at the very bottom, line of credit. You got a $4 million line of credit with CFC, and best I can tell you, haven't used any of that in the last couple of years. It's just there for a rainy day, I guess, or or icy day or something that you don't want to think about. Okay, up page 15, pension plan. This used to be a real short footnote. They used to just say how much you put in the plan. And that's really all it was. It still has that in the second paragraph. But what it's doing now is this disclosure has been expanded, and it's very positive in your all's case, because it describes the fact that you're in a multi-employer plan. So you and I think 700 or 800 other cooperatives all have this pension plan through NRECA. And you don't have an account balance there. Just your employees are in, everybody else's employees are in it. And it's just a big cost sharing plan, and it's called a multi-employer plan. But the positive aspects of this that I want to point out, and I'm going to see what paragraph, oh, it's in the third paragraph. It says, in total, the RUS plan is over 80% funded. That's good, because I don't think they can be more than 85% funded by law. But you read about these pension plans across the country that don't have the assets to pay the claims, only have 15% of the assets or 10% of the assets or something like that. And a lot of it's governments and things, but this is good. 80% is good. Where'd they get all their money? Well, first of all, the markets kind of have all. I'm not an expert on the stock market, but it's pretty high right now. I think we all agree to that. So that's where some of it comes from. But then back in 2013, I told you guys gave them $1 million in exchange for lower rates. We audited 12, 15 of you guys, and everybody did it that we audited. So assuming everybody did it across the United States, they got a big influx of cash back in 2013. So I'm not here to give an opinion on that pension plan, but it looks like it's financially in good shape. The deferred charges we already talked about, so let's go over to page 16. Whenever you have a customer that's more than 10% of your revenue, it needs to be disclosed. And you guys all know who that is. And I don't know if we call them a name. We're not required to do that. We can if you want. But we talk about how much of your total revenue Honda was and how much of the year-end receivables they were. The presumption here, if somebody was reading this report, that would be interesting information. If they were going to buy you or merge or something, that they would want to know that if you got a major customer. I guess there's some risk there to some extent. Subsequent events, that would be anything from May 31st through today that's happened that's significant. I don't know of anything. Every one of these I pick up has some information about COVID. You know, that seems to be, yeah. I don't think it's affecting utility, or at least electric utilities that we audit. I don't think it's affecting them much at all. Maybe a few more bad debts here and there. But you know, you're not a hotel, or you're not an airline or a restaurant, so somewhat negligible effects. Okay, on to the next document. This is where we talk about internal control and compliance. Internal control being, for the most part, checks and balances and the ability to prepare an accurate financial statement. And then compliance is making sure you're in compliance with your loans. And you are. I told you about the tier a little bit earlier in the current ratio, so you're in compliance. We have one, it's up at the top of page 18, one internal control comment, and it is nothing significant, but it needs to be in there. Let's see if I can explain this. Hoosier, you're putting your share of Hoosier's margins on your books. And you have what is known as significant influence on them. You go to a board meeting every month, and you go with it, right? So you're up there voting, you're controlling some things of what go on at Hoosier, so it is appropriate for you to record your share of their margins on your books. That's just generally accepted accounting principles, boring stuff. But you are doing the same thing with 5 or 6 other things, like Indiana Statewide, United Utility, NRETC. There's five or six other, a whole lot smaller things in Hoosier. You're recording them the same way because RUS tells you to. RUS wants you to do it. It's insignificant, but I don't think anybody, us or none of you, have sat back and said, do we have significant influence at these other places? In fact, you probably don't. But so anyway, that's a comment that needs to be in there, but it is absolutely nothing to change, and you just can't. Okay, on to page 19. This is a report, and it's only, I only see it, well, as far as I know, it only exists with RUS borrowers. This is something they want the auditors to write, and see down at the bottom of page 19, see where the short sentences, and then they continue on over on 20. Those are all various accounting policies that RUS wants you to do. And so they want us as auditors to make sure you're doing these things the way they want them done, and you are. Occasionally they'll send their own auditor around. Have you seen him or her lately? Okay. But anyway, this is just telling RUS, yes, they're doing this like you want it done. Now, I can talk about every one of these. I'm assuming you don't want to. Okay, on to page 21. RUS has another rule. If you invest in any type of for-profit venture, they want to know about it, no matter if it's significant or not. And that's Hometown Energy, and this is just a little 2-year synopsis of what's happened with them. I've never heard RUS come back on any of these, but they want to know it. This disclosure has to be there. Okay, on to 22. This is auditor communication with those charged with governance. That would be you guys. Years ago, everybody heard of Enron? Before the Enron situation, as long as the auditors got their way, or were happy, or it was resolved, nothing happened. Now, we have got to write this letter, and under certain headings, say nothing happened. It's just, again, it's another attempt at transparency to the board. In other words, if Jenny and Eric and I argued over something for all afternoon, even if I convince them I'm right, I still have to disclose it. So if we had any type of conflict, second guessing, anything like that, it has to be disclosed. And if you had a significant audit finding, you did difficulties encountered, whatever that is. I don't even know what that would be, but there was nothing like that going on. If we had any past adjustments, what I mean by past adjustment, any adjustment that we found, but because it was so small, didn't make it. There was one of those on Hometown, concerning Hometown, it's about $16,000, but they've already corrected it. It was corrected. It was information that wasn't available until July or August, and it was only $16,000, insignificant. It was corrected in the next year, and so we say that. Disagreements, didn't have anything like that. We didn't have anything where you went and sought another approval from another, or another opinion from another auditor, like that. So it's just nothing in this report. It's unfortunate that we have to waste paper on it, but there you go. Yes, sir.
So what is our threshold for materiality?
I'm trying to remember. Probably a lot in your opinion. What is my threshold is probably about, or not my threshold, just probably $250,000 or something. In other words, we would look at this and say, you got $55 million of assets, so if they're within $250,000. Yeah.
So the 16 is
Oh, clearly.
non-material.
Right.
You just know that.
But you need to make that decision. You might tell me before I leave here the 16 is material and we want to go back and change it. I'm not going to do that. But it's not, shouldn't be my call.
there was only one past adjustment, that was it, correct?
Exactly.
So, but if there were multiple past adjustments that cumulative exceeded the 250, say you had a 16 and that
Yes.
individually they were all below your threshold or scope, if cumulatively they exceeded that, is that an additional reporting you have to make, or is that?
Well, if they, yes, yes. If they cumulatively went over my number, 250, then we probably have to make, I would insist you make them. But when they're under that, and they're just kind of insignificant things, I'm not gonna make you make them, but I've got to tell you about it, and you may say you want to. But that was a timing thing, it's already been fixed, and
You mentioned the tier ratio was over 3.2 something, I think. What about O tier? Do you know what O tier is?
I do. It was 1.96, and you need to be at 1.1.
A brief description of the difference?
O tier does not include your capital credit monies and your ability to repay your debt.
Flip back to page 6, I'll get real specific. Regular tier, and that's times interest earned ratio, on page 6, begins with bottom line. Begins with the bottom line, regular tier. O tier is operating tier, and that begins with operating margins of $756,000. Yeah. The big thing that's not in O tier is you don't have your Hoosier allocation.
Our metrics is based on the O tier. That's
Because that's the allocation, not the actual retirement number.
Correct.
I've always liked O tier better than tier 2.
That's the one we track.
Yeah. Anything else?
Do any board members have any question for open session? Okay, we are then going to move into an executive session, a short executive session. Just you, so if I could ask everyone to step out of the room for, probably won't be very long. Okay, we're going to move on to the CEO report. Brett?
Yep, so as you guys heard, disconnects, we just got through doing that. I'd like to publicly thank Crystal. Her and her team did an excellent job. We were over 200 disconnects and we landed right around the 70, I think, number altogether, and those are like everything included. So that team really worked on making phone calls. We made several phone calls. We did letters. We offered a payment arrangement. So there was a lot of work that was done. I know on Monday and Tuesday, well, Friday through Monday basically, and Tuesday. It was a little hectic around here, but we got through it safely, and so thanks, Crystal. Some of my time from last month, I've really been in depth, and I'm going to give you guys an update on planning for our mission vision and the next strategic planning session. Pat and I have been wrapping up the tree trimming escalations with a few members out at Lake Santee. So we have an escalation process where we don't get agreement from the member to cut according to our specs. Pat and I and our tree trimmers go out and meet with them. We were really successful and we're almost wrapped up with the lake, so that's good news. And then the member service committee work for Hoosier, which I'm going to report out here shortly on, has taken some of my time too. So those are things we've been working on. I'm just going to keep moving on here, Michael.
Yep.
Some strategic project updates. So I got a few updates I'd like to go over for just basically project updates for the month. Our yearly RESAP safety improvement plan, it's on track with our audits, and then our gravel yard. We have to submit every year what our safety plan is. This year it was around doing 22 audits. We're about 10 now. And then the gravel yard to free up some space in the back. So those are on track. For our 2020 construction work plan, so we are behind on this project, really due to two things. One was the allocation of Chris's time. We identified a risk. I know you guys also identified it as a board with our pole contact approval process. Allowing contacts to be on our poles, where they're too low or too much weight for our poles. We did create a process. We pulled Chris off the construction work plan to do that, and then just crews availability. I think we underestimated what we thought our crews could get done as opposed to getting it all bid out. We are working to complete, so kind of what we're doing is we're working on planning projects that do not qualify for the RUS funds and therefore don't have to go through the rigorous paperwork. So you'll see the financials here in a minute, but our plan is to do that. And also Highline, we got Highline on board about a month ago. They're working on engineering and staking so that in 2021 we don't run into the exact same thing. And then the voltage regulators have been ordered, but probably won't be until the end of the year. So that's kind of a construction work plan project update. The other one that I consider off track is our pole catch-up or our pole replacement program. So this is kind of three parts. One, New River Construction is who is contracted to do our pole replacements. That is on track. They will have those poles done by the end of the year. What we had planned on in the 1.7 that's in our capital expenses this year, we planned 90 meter poles to be complete, and then the 2019 rejected poles we plan to bid and complete. These are both off track to the reasons I just talked about before, and you'll see it in our financials. That's why we're cash heavy right now. Some of the other projects, the member engagement and communication strategy project is on track. We completed a breakfast with Brett on August 14th. We have monthly breakfast with Brett's planned for the rest of the year, and then we have a town hall planned in October. We're also looking at, I know we talked about not having the annual meeting, trying to put together like a member appreciation / EV experience. So we are potentially looking at doing that in October. No set dates, no commitment at this point, but we are looking at doing that. We would do it in October. Try to do it outside, obviously, to where the COVID we wouldn't be affected. And then last is the bill reprint redesign, which Crystal is heading up, and we're on schedule for an October on that one. So that's the projects updated. Any questions on that so far? All right, from a metrics in July, if you guys remember, July was hot. Our median temperature was 76.2 compared to a 4-year average of 74.9, so almost 2 degrees warmer than our 4-year average for July. Cooling degree days were at 355 compared to a 4-year average of 342, so not a huge amount of cooling degree days, but overall average temperature was up. Our purchases for KWH was up. According to our 4-year average, about 6.9, so almost 7%. And then our NCP demand was up about 1.1% in our 4-year July average. Our monthly billed meters were up about 7 from the month prior. From a reliability standpoint, lost consumer hours were up over a 4-year average, quite a bit actually. It was due to, I'm sure you all heard about the dump truck incident on, 3, where they hit and broke 4 poles. That took a lot of people down for an extensive amount of time. That drove that number up. Main causes, again, were really vehicles. We had a lot of vehicle and machinery accidents this last month, and then trees behind it. On our fleet downtime, we were about 40 hours compared to last year at the same time. We were at 47 hours. And then safety, as I said before, we're at 10 field audits to a plan of 22. So we'll have 22 done by the end of the year. We're at 10 today. And then one thing I'm proud of here, and Crystal's been a part of this, is our record. We had 13 safety suggestions or near misses. So these are things that crews or employees are basically bringing to us. And we've implemented 6 so far, and we have another 4 coming up. So, that's one thing you never want to get stagnant on, obviously, is ideas of things that we can do to improve safety. So That's the metrics. I did want to go over DSM because it has been consuming quite a bit of my time. What I mean by DSM is Hoosier Energy's, I'm actually the chairman for what they're calling the DSM subcommittee. So this is the recommendations. I'm not going to go over them in great detail, but I thought it was important enough to kind of let you know where we're going with 2021's DSM program. So these are the things like rebates and all those. So we basically, this group was made up of 8 different co-ops, and the rest, so the other 10 were part of a survey so that we captured all 18 co-ops within Hoosier. We came up with 3 core values, and I think this is important because this is where our dollars at Hoosier are going to go to from an incentive standpoint in the next 5 to 10 years. So beneficial electrification, anything about that, it's based around load growth and reducing fossil fuels. So that's one core value. And I would say 2 and 3 are very similar. 2 is member focused, putting the member consumer first by opening, you can read there. And then trusted energy partner. Again, those 2 kind of go hand in hand, but those are really the 3 core values that the DSM is transitioning into. And then kind of give you a high level of what we're doing next year. So discontinued programs are appliance recycling. So today you can call in as a member, have a old refrigerator or whatever picked up. So that's being discontinued. LED security and light incentive for co-ops is being discontinued. Really that was driven by a saturation rate in the field. Most people, if you're going to replace a light nowadays, you're going to replace it with LED. The CNI HVAC incentives, and then the bulk LED buys, bulbs. And again, those incentives are sort of old, and the market's being saturated. So it's not really an incentive anymore, and that's why they're discontinuing it. Some programs that we're continuing but have some changes is the LED lighting budget reduction. So we're doing the lighting still with a reduction in budget over the next 3 years, and I think after 3 years it gets phased out. The online lighting store rebates, so we're still going to have the online lighting store, but it will no longer be rebated. And again, this will go effective in 2021. So today, we have the online lighting store. You can buy LED bulbs at a reduced rate. You still will be able to buy them in the future, it just won't be at the reduced rate. Energy kit upgrades, so we are offered energy kits through Hoosier. We use them for our annual meetings and new member signups. The quality of those things have been degrading and the prices have been going up. So the idea here was that we were going to reduce the amount of overall spend in it and then work on getting the quality up on those. And the last 2 are smart thermostat expansion. So Hoosier did a pilot for smart thermostats this last year. They're expanding that. And then the rural energy audit expansion. That is a USDA program where if you're a member, you can have, if you're willing to spend some money, there's a rebate that helps basically foot the bill for that, and they come out and do an audit. And then new programming, so residential HVAC tune-up, that's been something that has been proven through a pilot. Educational web platform development, so using the online lighting store is kind of a web platform. Choose EV is a great example of it. Hoosier wants to be kind of a one-stop shop, one resource to go to website that we can actually go into. Our members could get on through our website and access things like EV and all those other types of resources. And then beneficial electrification. So there's going to be a lot of pilots around commercial beneficial electrification, industrial, agriculture, and horticulture, lighting. So those are kind of the discontinued, again, continued changes and new programming at the DSM level. So these will impact what we obviously offer here come 2021. Questions? And this, there was a committee that develop these recommendations. They were approved last month. So again, they'll go into effect for 2021.
What's the net change to Hoosier's budget?
It's about anywhere between 480 and 580,000
Less.
less. That's for 2021. Any other questions? The big thing here to note is we're really moving away from our traditional type rebates to more of a beneficial electrification. Although we're still going to have the, the residential, heat pumps and water heaters and things like that. Those will still be intact. All right. If there are any questions, Michael, I'm going to go ahead and go forward.
Are you going to financials?
Now I'm going to do the vision up.
Okay.
The process.
Before you do that, something I forgot to ask the board, since you're moving to a new thing. Do you as board members want to approve the audit this month, or would you like a month to look at it and we'll approve it next month? I'm fine either way, so I didn't ask that question earlier, so I need to. Anybody have a preference one way or the other?
I'm fine with approving it right now.
Okay, then before we move on, can I get a motion to approve the audit?
So moved.
Is there a second?
Second.
All in favor? All opposed? Okay, audit's approved.
All right, so very important, mission, vision, strategic planning. So this is something I've been spending a lot of time on. Eric and Crystal are kind of partnering with me to get through this as far as planning. So we're kind of to the point where we think we know what this is going to look like. Just want you guys to be involved and also provide some input as far as where you think you might be injected into the process. So please ask questions if you have them, because we're getting to a critical spot where we're going to have to start planning some stuff. So why are we doing strategic planning? Company focus on what really matters. If you don't have a vision, it's pretty difficult to get to something. And it's really planning for the future. So, what are the value opportunities out there for our members, and what are the threats? Old thing I like to see is that little caption on the bottom. If you don't know where you're going, it doesn't matter which way you go. I think it's kind of important. So this is what the process looks like, and I want to highlight the different steps that we're going to be taking, or we're proposing here. So number one is our ops review. So that's going to cover all of our metrics and kind of the tactical short-range type things. So we were supposed to have that a couple weeks ago. We did not get the KRTA data from CFC. We're supposed to get it on the 30th. With the COVID, we didn't know if it was a great idea to get everyone together anyway, so we've pushed that back into, we think, maybe possibly November 11th, but again, that's up in the air right now. But that is kind of one of the first steps that we're going to do. Second step is to really understand our member and our outside influences, and I'll go into detail about what I mean by that, but it's gathering the data rather than just our experiences or our opinions on things. It's more about gathering the data that's available. Once you have the data from an ops review and you have the data from our external influences, then that ought to be enough for us to create our vision statement, which we don't have today, and then looking at if we need a mission statement update. And then once you have that, it's more or less the strategic planning. How do we get to the vision? And then last, once we come up with the company initiatives, it's all about bringing them back here and my team working together to create projects. So I want to go through these in kind of a little bit of detail so that you understand. So the ops review, again, this is staff and management. We'll be creating a report and we'll report out on it. At this point, we don't feel like there's a facilitator needed for this. This is really just me leading with the company, looking at our data and our metrics, and kind of building the picture upon that data. and we'll have a report, obviously, that we'll report out. Right now, we're looking at, I said November, we said September to Q4, probably November timeframes when we're going to be looking at that, doing that. Next is the member and outside influences. So this is going to be an activity that's going to go through Q4 to Q1. Right now, we think this is a staff and management event, or mini events, possibly being facilitated. We're really looking at this. When you bring a facilitator into this process, you're talking thousands and thousands of dollars. So number one is do we have to have it? And number two is can we justify it? And does it make sense? Does it provide value for us? So right now we're saying there's a possibility we're going to need one for this, but we haven't landed on it completely yet. So what do we mean by member and outside influences? It's really three different groups. So one is the members' expectations, what value opportunities are out there, what are the trends. So what we're going to end up doing is a residential member town hall roundtable event. We're going to do a CNI member town hall event. Our member advisory committee will have a task. And then we'll have a breakfast with Brett topic around this. Again, this is really just to kind of understand what value opportunities are out there and expectations from members. Two is our community expectations. So this one, I apologize, you probably can't see this very clearly, but I'm going to go through each one of them anyway. So what community expectations do we have? So what we're planning on here is city and county leadership, surrounding counties also. We're going to do a roundtable event, get them in. Trustees in our territory, we work with our trustees. Crystal works with our trustees building time. So we'll do a roundtable with them. First responders, we think it's important to understand what first responders may need from us. I know we've built a pretty good relationship with Decatur County's dispatch during our ice storm. We built a process that worked pretty well. Media, doing a roundtable there. And then our EDC Chamber Community Foundation, obviously those are very important. Schools, and then realtors. We know realtors from an EDC standpoint. So we're looking at, again, these are going to be multiple points where we're going to ask folks to participate. And then last is meeting with our partners to really understand. Again, this is all about painting the picture of what the future looks like. Because if we can paint the picture of what the future looks like, then we just need to make a decision how do we want to play in that. If we don't have that, how do you know where you're going? So we're going to be working with CFC, IEC, Huger, NRECA, legal counsel, and rate consultants. So for an example, CFC has responded, and we're going to set up two different events with them where they're going to come in. One of them is what they see like the lending landscape looks like. So what does lending look like 5 to 10 years from now? That's important to our industry, obviously. IEC, it's really around the regulatory aspects in the state of Indiana. So again, we'll be working with partners to set this up. Next is, once we have all the data, then we're going to be sitting in a room trying to figure out what our vision is going to be. The reason this is important is because when we get to strategic planning, there could be a fork in the road, right? We may decide that the data tells us we just need to be one of the best electric providers in the state of Indiana or the United States, I don't know. Or it could say that we want to be more of quality of life for rural Decatur and surrounding areas. Those projects coming out of that will look completely different. And again, this is all about driving focus. And what's the plan? Where are we heading from here? You don't have a plan, how are you going to get there? So I'm looking for input on this one. I'm looking for our thoughts originally were we're going to create all these events. Some of them will videotape, some of them will create reports. The whole idea is to try to find the common themes out of that and then bring that all together into, okay, here's what the data is telling us and here's where we think our vision is going to be. So looking for some input as far as how much you guys want to be involved in this. Our thoughts originally were is we'll bring you some kind of underlying, here's what we think our vision is, here's some options to go around that vision, and then the same thing with the mission. That way you are involved in the process, you're gonna get all the reports and everything that go into this. But I don't know if you wanna be in the facilitated event that we are gonna be planning for Q1 and Q2 of 2021. So, does anybody have any thoughts or comments on that?
I'm just curious, you said no facilitator now, but possibly, are you dealing with a consulting firm to do this? I mean, are we expensing that, or is just internal you're doing this now?
Right now, it's all internal.
Everything's just internal? Right?
Everything's internal right now. When I say possible facilitator, what we're doing is looking at, does it make sense to have someone come in and help us out on it? And I think we're a little ahead of the curve as far as what we're doing here, as far as our process. So we possibly may not even need a facilitator for this part. Although the nice thing about having a facilitator is we're pretty biased, right? We kind of know, and you need somebody outside to look at, here's the common themes over all these different events, and that's the advantage to it. Again, depending on what the cost is compared to what the value is, it may or may not make sense. Did I answer your question? As far as mission vision, anyone have any initial thoughts there? I mean, what we're thinking
Do you not like that
is,
mission anymore?
what's that?
What's wrong with that mission, our regular mission?
I don't know. I don't have the data to tell me that it's right or wrong at this point. If, let's say, we want to be more of a quality of life, so maybe broadband, does that mission statement fit us? Maybe. I don't know. I don't have the data.
I'm just curious.
And then the vision, we don't have a vision today. So we don't know what we're going to be in 10 years.
Earlier this month, I sat in the strategic planning through IEC, and it talked about all of this. And if I didn't say it openly, I think, Michael, you were there one day, Carl, you were there. If I didn't say it openly in there, when I look at some of the things we address in this meeting relative to what they were talking about from a board standpoint, we're so far down into the weeds and operational and reactive instead of visionary looking forward. I think this is imperative that we do something like this. I'm not suggesting we need to have a facilitator because I know that can be costly, but this is something that we as a governing body have to devote time and energy to help dictate where we want to go. And I think we're very reactionary right now, very reactionary.
I mean, who do we want to be in 10 years? We could all have opinions on it, but let's get the data around it. And then again, the focus is the other thing. So if we're extremely focused on here's where we want to go, then we can create projects around those and be laser focused, everyone in the company, at executing to that plan. Otherwise, we're basically, I always show that, and I didn't put it into these slides, but your overall metrics are just kind of stagnant over decades. Yet you're going from this project to this project to this project to this project to this project with real no focus, right? Blockbuster did that before they ended up. So again, our thoughts on this right now are that we do the event and we bring you kind of like a straw man. So basically, here's what we think vision looks like, and then here's some options, and then get your overall kind of approval and creating that, because I think the vision really needs to come from you all. Does that make sense?
That's me. Is there anybody that wants to be involved in those, or thinks they might want to be involved in those, coming up with the vision, those suggested visions before they come to the whole board, or not?
And this would be in Q1 and Q2, so it's coming up.
Definitely don't have to. We can let them come up with suggestions and go that way, but is there anyone interested in being involved in making those? And if you don't know right now, just let us know. That's definitely an option.
And then last, the two things are strategic planning. So in Q2 of 2021, we will be asking for participation with the board on that. So we have a vision, we know where we want to go in 10 years. Maybe it's we're gonna be quality of life, we're gonna work on broadband, or maybe it's, you know what, we're just gonna be an electric provider, we're gonna be the best one out there. I don't know, we'll see what the data steers us to, but okay, we have the vision, now how are we gonna get there? That's the strategic planning, and that'll be an event that we'll need you guys and gals all for. That's gonna be in Q2 of 2021. Once we have the initiatives, just like we did in 2018, my team will take the initiatives and create projects or report out on those projects every month like we do today. So that's the entire process and kind of what we're grouping everything in. This is all starting to come together, so I mean, we're going to start spending quite a bit of time putting this all together and where we want to be in the future.
So we did this 3 years ago,
Mm-hmm.
or something similar, maybe not to this depth. So obviously it's got a shelf life of 3.5 years. So what's your intention with this? Like,
More long-term. It'll be short and long-term. The initiatives that we came up with, we created projects, and those projects will be done at the beginning of 2021.
so we've kind of exhausted that.
We have no backlog at this point. So where do we want our resources to be focused? That's the question. And this process gets us to a data-driven decision rather than all of us sitting in a room and putting a SWOT together. And question? Any questions on the process? Any questions on kind of what's coming up, what to expect, where we think you'll be needed? Because we're going to start planning some of these events soon. So I know CFC's thinking they can be ready soon, and we'll be planning some of these events.
So is the CFC thing just to review the KRTAs then?
No, it's CFC. I actually, they'll be looking at the industry trends. They'll be looking at financial trends and economic impacts. In other words, what do they expect to see in 10 years from now, right? From a lending and just from the economics standpoint. There's one or two other ones that I can't remember off the top of my head.
But our KRTA presentation is going to be in November.
That's going to be part of the option. So you'll get that as a report from the option. It's going to be a dashboard that you get right now monthly. It'll be a year from now. The only reason we haven't gotten to this date is we don't have the data. And we're supposed to get it on the 30th of this month, but they told us that last month we didn't get it. So. Any other questions? All right. Ready for financials?
Yes.
All right, so in our financials, you're going to see there was an A and a B. So Eric couldn't be here tonight for other reasons. But basically, A is what you typically see. B is what we're suggesting to move to eventually. There isn't really any time frame. It's really getting you used to what you're seeing on a monthly basis. What we would like to do is to create just the normal balance sheets, income statements, cash flow, and plant investments, and throw those up in the top where it's just for your information, the normal stuff. Get rid of the Word document and move to what you see in B. So again, Eric wasn't able to walk through these. He spent a lot of time on this stuff, so expect next month. If you guys get a chance to please look at these and bring any questions and comments next month, because Eric will be back, and then we can make adjustments or whatever. The whole idea is we wanted to paint the picture visually a little bit better rather than submitting a 10-page financial report with a bunch of words on it. So that's what you see the difference between A and B really is. So I thought I'd walk through Eric's normal report out. So in the month of July, kilowatt hours sold were above budget. So prior to July, we were about 14% behind budget in sales, and now we're right about 11%. So we've closed that gap. I'm going to start on the balance sheet. So within the balance sheet, we stayed pretty consistent from the previous month. If you look at that one item of note is that we again had more depreciation than planned additions, which led to a month-to-month drop in utility, net utility plant. You can see the difference there is the 32 million to 32.29 to the 32.27. So the other changes from a balance sheet is there was a significant increase in the AR over last month. Again, that's really just due to sales. Any questions on the balance sheet side of things? Overall, it's no major changes other than really those two things. And sales is driving most of it from an AR standpoint. All right, so income statement per our operating margins in the month of July was around $263,000, which is better than budget by about $148,000. This is a result from a higher than budgeted KWH sales and continue to have controllable expenses below budget, really due to COVID. Our year-to-date operation margin stands at about $792,000, which is approximately $300,000 better than budget. The majority of the positive variance to budget is related to our controllable expenses being under, again, to COVID. Any question on the statement of operations? I know one question is when do we bring, we're estimating right now to be about 300 above where we planned on being for margins, and at what point in time do we want to do anything with those things? And Eric and I are kind of bringing up some things that we'll bring to the board next month as far as, obviously one of them we talked about was the security projects, but what are we going to do, or what are some options to do? The other thing is that we are going to need this cash come next year. I mean, we have roughly a $10 million work plan in the next couple of years, and we're not borrowing all that, so we'll have to have cash for that. We're going to bring some options to you. Any other questions on the operation margins section of this? If not, I'm going to move to cash flow. All right, so within the cash flow statements for July, you will see that we had an overall decrease in cash of about $87,000 for the month, which brought our cash balance to about 2.3 at the end of the month. The items that I'm going to note to change were cash received from our members in July was higher than expected, just really due to sales. Cash spent on plant investments was below budgeted levels for July at approximately $200,000. Overall, we spent about $750,000 through July, and we had budgeted to spend roughly 2.3. So finally, we paid out our first capital credit retirement was approximately $317,000, so that came out of our cash flow statements this month, or in July. Any questions on cash flow? All right, so plant investments. Currently, we're projecting to spend approximately 2.3 compared to an original budget of 4. This really goes back to what I was talking about earlier with our pole replacement program and construction work plan projects being off track. So through July, we spent about $750,000, which means we plan to spend approximately $1.5 million by the end of the year. I went over the strategy there. Really, it is to try to pick up some construction work plan projects that we don't plan on borrowing against. They don't have to go through the rigorous paperwork. Chris is working on those as we speak. And then we started the Highline, and Highline has started doing some engineering work. So we're coming up against that time frame where we're going to have to start getting out bids for 2021. Budgeting season isn't that far off. So that's what Highline's working on, is to make sure that we don't have the shortfall of construction work plan projects that we're kind of in right now. Any questions on plant investments?
just for budgeting time,
Mhm.
so you said you overestimating how much we're able to get done in-house.
Mhm.
Are you taking, I'm assuming you guys are taking that into consideration and putting more out for bids this year?
Almost all of our construction work plan projects in the next 3 years are gonna be contracted out. They'll have to be, unless some tick in the economy or something, but we're getting a lot of new services and service upgrades that are just keeping our guys busy. The meter pulls, we think we can still hit a lot of those. But everything else is gonna have to be contracted out, other than, there's an occasional line reconstruction that we can do, but those are not very big projects when it comes to dollars.
Okay.
Did I answer your question?
Yes.
Last year, we were able to accelerate some tree trimming there at the last minute to offset that margin a little bit. You think that's a possibility?
I do.
And if we do that, is that going to accelerate our reclaim
Yes.
timeframe?
But
By
yes.
how much?
I'd have to go back and run the numbers, Jason, but it definitely, I mean, every mile that you can trim out is gonna take time.
So what year are we scheduled to have the reclaim done now?
Right now, I think we're still 3 years away. Tree trimming is, the reclaimed tree trimming is, the repayment on that is huge. I mean, the amount of dollars that you're going to save this co-op by not sending crews out and by not having outages. I mean, when you have an outage, the check register kind of stops, or the cash register. So it would be hard to put a number on that, but I guarantee you the payoff for that investment is way over anything else you can do to accelerate. Because that's our job, is to spend the margin, make investments based on the margin that we're producing that brings the best bang to the buck, best bang for the buck for our members. Tree trimming is a huge piece of that. Did I answer your? Take a look at those new ones. Again, we'll produce the exact same thing for next month, but ideally, we would start moving into more of those visual reports rather than the 15-page Word document. Again, we're more than happy to switch some things around and add anything that you want to see or delete anything you don't. And if you have, Eric did want me to tell you all that if you have any comments on the graphs and charts and the order of those, feel free to send us an email. You can send the email to me, and we'll take a look at it and propose a change if needed. But I do think once he goes through each of those charts, it really starts to paint the picture of, the big picture of our financials pretty easily. Any other questions?
Okay, we're going to move on to member complaint regulations and policy. This is another thing that we discussed at the executive committee meeting, and it also came through legal a little bit. We have in place currently Rule 16 for member complaints. Because we can't hear member complaints about employees in the boardroom. It's not appropriate for us to do. So we're making, what the proposed is to modify Rule 16 and then also policy 2.7, looking at the wrong spot, to make sure members know the proper way to file complaints. Okay? If this goes through the proper way about a job or something, needs to come through the office, and they will deal with the complaints initially. If they're not satisfied with the way it's handled at the office, then they can petition, have the board look at their complaint and review it at a board meeting. So what this lays it out exactly how it needs to happen. So are there comments on this? So. Questions on any parts of it?
From our side of it too, we did, Michael, just to let you know, created a log. So each one that comes in where it meets these criterias, we have a log number on it, and we have a format of a letter that we'll send to close these things out as they go through Rule 16. So we could always make that available to the board if they wanted it, but it kind of gives us a mechanism to track and
Okay.
complete every ask.
So that log would include a complaint regardless of what medium it was transmitted here, whether it's a
Correct.
phone call, whether it's from window, email, whatever the case is.
Unless it's an instance where the everyday things that me and Crystal may get that are closed out to the satisfaction of the member verbally, those aren't going to go through necessarily Rule 16. Rule 16 is kind of a formalized process where the member's looking for more resolution than just the everyday. In other words, if we can't satisfy them verbally that day, it's probably going to go to a Rule 16. Is the way I view it.
Other questions? Okay. No other questions on it? Is there a motion to accept the changes?
So
Yeah.
as for both.
Right now, it's
16,
just,
it's
just Rule 16. Steve. Any further discussion? All in favor? All opposed?
Aye.
Please read.
Please document my name.
The changes to policy 2.7 are to make sure that Rule 16 is followed before it comes before the board. And once again, the purposes of the Rule 16 is to help protect us legally, so that issues coming before us are proper. So if the customer wants to present to us, that's great, but if it's about complaint, it has to go through Rule 16 first, so the people who know the issue can deal with it. So that's the proposed changes to policy 2-7, is to make sure that Rule 16 is followed. Any questions on it?
The word avail itself, it's,
Where are you at?
I'm not sure if that's the first, that's
In number 3.
correct.
Maintenance of the building.
Being known. first available.
First available. Shall have first available himself. That's it. I don't know. I'm not.
That just come from legal.
Yeah, that word did.
Okay.
I asked the same question, I had to look it up.
Any other questions on this? Okay. Is there a motion?
So,
Jason? For a second? I'll second. Any further discussion? All in favor? All opposed?
Aye.
please record my name.
Please document my name.
Same here.
Okay. Before I move on, one of the things I took from our training course was when we make decisions like this, especially when we're not in agreement, we need to come with an official statement when the decision has been made from the board. So I would like to propose starting to make official statements on stuff like this as to the reasons they're being done. And on this one, I don't know. I'm not going to do that. I'm not going to force the issue, but it's something we need to start considering doing. Why are we making these moves? My official statement would be because I don't have to worry about. I should have thought of that ahead of time. But just to make sure the board is doing what the board's supposed to be doing. The board is not a place for the first line of complaints. So we're making sure that complaints are going through the proper process. And that's my whole reason for doing this. Legally, they need to go through the proper course. So,
We're all supposed to state why we.
no.
We're
We're
going to collectively.
as collectively, we're supposed to create a statement as to why our decisions as a board. And then that's the official statement for every board member. And I'm not saying we have to do that today. It's something that we need to start thinking about doing in the future though. So, and I don't know that we're prepared to do something like that today. So,
Why don't we make a statement that probably going to be very professional, so.
Yeah.
Let's just get that correct.
we'll skip that for today. Okay, we're going to move on to policy 2-1, line extensions and rule 25. This one deals with, I don't know if you guys can see it, the mainly legacy things where there's a service there that for whatever reason is being billed for that isn't there anymore. Currently, the policy says we pay 1 year of derelict charge, or return 1 year's worth of fees to that member. And we're just looking to change that to possibly anywhere from 3 to 10 years. I think it's written in here to go to up to 10 years is what it's currently redlined to. It's not costing us to do that. What are your thoughts? Any concern about that?
I think it makes perfect sense.
Okay. No comments, I'd take a motion.
So moved.
Second, okay. Anything further? All in favor?
Well, I do have, including incorrect rate or rate schedule applications. What is that? Is
Where,
that pretty broad?
where are you at?
Under D? Have we looked at what our potential risk is going from 1 year to 10?
So the incorrect rate and rate schedules, Crystal, as far as I know, we don't ever have those.
No, I mean, that would just be if, let's just say that we stuck somebody on single phase and they were supposed to be on large power or vice versa. You would be going back and adjusting them because they should not have been billed on that specific rate. But no, I mean, I don't know that, I don't remember any accounts that we've had that problem.
I know there was one at one time with the South Decatur school system that it only went back 1 year instead of going back more. But that was many years ago.
I was gonna say, I don't remember that
That
one.
was one of the stories. I just, my concern is what kind of risk are we looking at? If we're talking strictly security lights, I don't have a problem.
Right.
But if this can be much broader than that, then I have
We
a
talked
problem.
about maybe capping it too, right?
I think it should be, because this is leaving us wide open,
It does.
especially with our bigger customers.
But the argument was if we overcharge the member, they deserve that money
Yeah.
back. That's why we're doing this. We don't have the right to keep that money.
And I would hope that most of those, Jeff, would fall into 10 years would be, I mean, we've got records all the way back to 2004 when we put the system in place. So, I mean, most of these would be caught earlier
I
than
was gonna
10
say, if we're worth a darn, it better not
Yeah,
happen
but 10 years
before somebody knows what's
Yeah.
going
There's a
on.
little responsibility on the member's part too, right? You don't just blindly pay a bill for 10 years and never look at it.
But that's where I'm at, but that's what we're looking at though, right? That's what drove this to
Because of the
the,
attention.
I mean, with
Yeah.
the security light, that's because the member didn't pay attention.
Well, so the one is, yeah, sort of. But the
It's
one
happened more than
instance,
once.
Yes.
well, the one instance was there's two houses together, they're family members. One security light in between the two houses, and they're both being billed since forever, right? We don't know from records, maybe they both had one and one got removed at one point in time, we don't know. But they're both getting billed, so those are the instances that we think we're still gonna see.
Crystal, I think the asterisk to this was as the new bill print rolls out,
Correct.
please check your bill.
Yeah.
You know, tell members, please verify your bill, you're being charged correctly for your security lights or what have you.
Well, and I think that a project that we need to put into our scope is that we do an actual inventory of our entire system. Not just, we did this back in 2014 where we went to every location that we were billing for a light. Half of that report is missing. I have half of the report. I do not have the other half, and those people aren't here anymore. So every light that has an issue is on that part of that report that is missing. Go figure. So I want us to do a whole system. I don't care if I'm showing that I'm billing you for a light. I think we should hit every service that we have and say, how many lights are here, where are they located, and then we can document it on our side. If it's on the barn, if it's on the house, if it's on the shed, I don't care where it is. I want to know where they are and how many they are, and what size.
Crystal, you're restricting that to security lights?
Yes, because security lights are
That's the
the
problem.
number one problem that we have in billing adjustments. I mean, every now and then we have a meter problem or we have a multiplier problem, but 99% of the time it is that we're either billing somebody for a light that they had removed and we didn't know about it, or we don't even know that they have a light and they call in to report that it's out, and then we catch it at that point. But some of these have had, so this is just saying that you're going to adjust. I mean, in the situation that was the most recent, we can't really fault the member because neither one of them was seeing the other's bill. The one we had a year or so ago, it was on his bill, and it showed that he had 2 lights. He didn't pay attention to that bill. So there's just kind of two different situations. I mean, if I'm paying for a light and Brett's paying for a light and we never see each other's bill, we're never gonna know that we have an issue. We just both think that we're paying for the security light. That's not fair to continue, to not give them that credit back as far as the 10 years or until we have actual record that we've billed that member. Because we collected money for something that we never provided to them.
And you
But-
can only verify currently back to
To
2004,
04,
right?
yeah, because that's when IVU was put in.
But this goes the other way as well, right? If we're providing a service for which they have not been billed,
Well, I don't,
That's in the next, that's correct. in the next
it's
sentence.
different. I say.
Yeah, but that's only up to $300.
Yeah, I say it's a different type of adjustment.
So you will teach you up to date 70 or
That's addressed in a totally different,
Yeah, it's a different section. And
it's
it,
not the same.
It's not even this, yeah.
You're underbilled on that one.
yeah. So these are billing errors that are our fault. We're billing somebody for something that we should not be billing them. The other one is if it's a meter multiplier issue and you're gonna do an adjustment, it's up to the $300. Which is super confusing, so it would be lovely if they somewhat match. But we don't do adjustments like that very, I mean, I can't even tell you the last time we did an adjustment of that type. Security lights, we're probably doing them once a month or so.
How'd you go to 10 years instead of 10?
That, wasn't that from the recommendation from,
Is that from our
It's
emails?
3 to 10, wasn't it?
yeah,
10 years. Well, we looked at
That, yeah.
different ones, and it's anywhere from 3 to 10. To answer your question, the standard is 12 months from the IURC, but it's kind of like you can't do this. When we asked a bunch of different co-ops, what we found is usually it's between 3 to 10 years that they'll go back. So I'm more of let's be standard, right? Let's, whatever it is, I'm not gonna, do one thing for one member and then something different for another. We need to stick to the policy, so that's why we kind of landed on being more. I have a hard time looking at somebody and saying, we billed you for something you don't have, and I'm sorry, you only get a year's worth of payment back. That's tough. Did we answer your question?
Well, I just didn't like.
Well, but the last time this came up, he went to legal and they had recommended it's not changing. So, and I'm not opposed to changing it, it's a change in just 2 years, the directive we've been.
I think that the change was not recommended to amend it for one instance.
Correct. Not this.
Not that, and you're right, we should have at the time addressed the policy probably. But I think the advice from legal was do not make an exception for one member because you're not
could be right,
following
we don't
the member.
Yeah, it's not legal to shoot for 10, 9, 8. I mean, the IURC says 1.
This really kind of is a no-brainer. If we charge them for something they didn't get, they should get their money back.
I'm going to ask, though, does it have to be a current member, or can anybody, I mean, it says member?
You'd have to have a bill. I guess you could be, I don't know what the definition of member is in this. I don't know.
Well, all the other
That's
co-ops,
about
you have to be a
1985.
current member. Like, you have to have an active account.
So by definition, you're current.
Mhm.
Any other comments? We do have a motion on the floor that's been seconded, so any other comments on that one? Want it amended or anything like that? Okay, no other comments? All in favor of the changes, say aye. Aye. All opposed? Okay. We'll move on to policy review.
So on these two, I know we talked about these a little bit last time. We are going to spend some time looking at line extensions in the Rule 25, and we do this true up today. I don't know at what point we're going to have resources to work on it, but at this point, we don't necessarily have any changes. These are just two that we had been talking about, and so we put them on the agenda, Michael, for you, but I don't have any changes at this point for either of these. I didn't attach them in here, but you guys have the policies in them.
So any questions on those right now? Okay, move on to the educational article, I guess. Just the impact of EVs and being on top of it, being proactive. Any comments on that? Okay. Do you have the?
For the governance training discussion, I was just looking for some input from the board on anything that, it is part of my job to help. Governance is a hot topic for any corporation at this point, not just utilities. And so there are some specialized training. Really it's just a discussion. Is there anything y'all need from us to plan out from a governance standpoint? There is some BLC classes and some CCD classes that cover it. But if you want something special, let me know. That's really what this is about at this point. Originally, we thought about, at the beginning of the year, we're gonna have Brian Garrison come in and kind of go over some stuff. We didn't end up doing that, but if any board member would like us to look at future possible training around governance. The other thing we could do is we started, I don't know, probably 2 years ago, looking at the governance task force. You all kind of went through the governance points that they gave in that 50-some page report. We prioritized some of them. We made it about probably halfway through that list. We could bring those back into play too. It's up to you. I just want to make sure that we're providing any type of governance training that you all need, because it is definitely a topic of discussion. Everywhere.
Okay, I guess we'll move on to community trust.
I'm not going to bring the community trust report up on the screen, and I ask everyone to kind of keep this private, just because of the fact that these companies haven't been notified yet, so they will be notified in the next. Some of them have, but not all of them. We had our community trust meeting. I think it was last Monday, Tuesday, sometime at the beginning of last week. So those are the results of that. Again, if you can keep it on the download just for the next couple of days. Some of them have been notified in the last day or two, but
How many requests were there?
in total,
That's
I don't know off the top of my head. I can get that though for you. You just want to know how many.
I was just curious how many requests are coming in.
Did she put on there the ones that got 0?
No, she did not.
Okay.
She just.
I'll provide that.
Okay. Union negotiations are going to be coming up. In the past, there have been 2 directors that have sat on in the union negotiations. I believe probably we should have director sitting on them this year also. So we need to think about if anybody wants to be involved in that.
When will that start?
We're looking at potentially end of October, beginning of November. There'll probably be 3 to 4 dates. We don't know yet at timeframes of those. Again, I told Michael I don't think we need a decision tonight. It's more or less just start thinking about it if you're one that will be interested in it. Again, all you're really responsible for is just to participate in the fact that you all have to end up ratifying whatever we come up with. So in my mind, it is important that you have at least someone in there. It doesn't necessarily have to be two. I think that's what it's always kind of been, but that you have someone in there that you kind of give the power to, execute what we come up with. So.
Okay, so just keep that in mind, think about it.
Yeah, we don't need anything until probably next month.
Okay. Next thing is the NRECA regional meeting delegates. The delegates today are Steve with an alternate of Jason. I'm trying to think. It's on, yeah, the meeting is online this year. This is the one, anybody's welcome to attend.
It's $325 to attend online, but it doesn't matter how many people. So it's on the 14th, which is a Wednesday. You have to register, but you only have to pay one fee. So it's on the 14th and the 16th. The 16th is a Friday, and it's literally only for like an hour. But the delegate would need to be available during that time. And
That's October.
Yeah, October, sorry. And then October the 14th is the Wednesday, and that's pretty much all day schedule. And I put the agenda items on there and who's speaking. It'll be interesting to see how well it goes with being virtual. But we'll have it set up in the boardroom. Anybody that wants to participate, I would suggest whoever's going to participate be the delegate.
Are you gonna be able to do that?
Yeah, I can. I can allow somebody else to.
If you're not, I'm gonna ask to not be the alternate.
Okay.
That's kind of a
Tough time.
great
Tough time of
to
year.
be doing that. So, but if you're good and you know you're gonna do it, then we can
Yeah, that's,
leave it.
shouldn't be a problem.
So you don't need to revote, right? You just need to fill out the stuff if they keep the same delegates.
I think they should vote.
You should? Okay.
I don't think that's
Okay.
who was online as our
Okay.
You don't think that was the right?
When I looked today from NRECA, Jason was the delegate and we had no alternate.
Oh, really?
That's
So
definitely a typo.
From last year. That,
Oh,
I mean,
from last year.
that was what was in the system from last year.
Okay.
So we do need to change it.
So Steve, would you be willing to?
Yes, I will, but, yeah.
Anybody else be willing to at that time of year? Is there a nomination for Steve?
Oh, I nominate Steve.
Okay. Second. Are there any other nominations? Okay, Steve will be voting delegate. Anybody willing to be an alternate?
Dale. I nominate Dale. You already heard he said he could do it.
Sure.
I'll second.
Anybody else want to be an alternate? Okay, Dale, you're nominated. We'll be moving on. Brian, this was your report out from last month, wasn't it? From hometown?
This is just the minutes.
The minutes from the.
That typed up from last month.
Okay. So hometown, we have the minutes that Brian reported out on.
By the way, Steve, on the trust, so there was 8 funded and 5 not funded, 13 total.
So we had hometown, just if you read the minutes or not, that was reported out on last month. Jason, do you have anything from Hoosier?
Yeah, I do. The first thing I want to note is that due to the pandemic, we didn't have a lot of in-person meetings to the start of the year, so the board decided that we would retain the current officers. But in doing so, the secretary, Eugene Roberts, was ill with cancer, and he passed away last month. So we did seat Jody Creek from Whitewater Valley. She's the new treasurer. I also got moved from the Employee Relations Committee to the Operations Committee. And the minutes from the August meeting are on your call to order. One thing of note, if you'll flip the page, the second page, the member power supply flexibility presentation, that did end up getting voted on and it got voted down. And the reason being, if we change the wholesale power contract for all the co-ops, we could risk our grandfathered arrangement with MISO. And we're basically avoiding about $8.5 to $9 million a year of wheeling charges through MISO. If we change the wholesale power contract for the distribution co-ops, we're going to lose that, or could potentially lose that, because that would be considered a significant change to the contract. So a roll call vote was taken and it did not pass. So there have since been some emails and some discussion still. I'm not saying that Hoosier staff said a lot of the things that are wanting to be done can be done within the confines of the current contract. Therefore, we could maintain the integrity of the grandfathered arrangement with MISO and we wouldn't lose the $8.5 million. So I think that's kind of the direction that that's taking. And one other thing I want to note, it was in your meeting minutes, I think, from the prior month. No one asked me about it, and it's pretty significant. It's worth discussing, or at least mentioning. Donna Walker reported, and it's on the minutes, that as of right now, let's see, I had that written down for you. She expects that our 20 and 21 wholesale rates are expected to be $1 a megawatt hour less than the approved business plan from earlier in the year, and expects that to be up to $2 a megawatt hour lower for 2022. So why is that important? A dollar doesn't sound like much. Well, each dollar in megawatt hour is $350,000 for Decatur County REMC. So that's part of what we're seeing in wholesale rates and what we talked about a little bit with the auditor and the power costs. We are a little bit lower than we expected to be. And why is that? That's because they're taking advantage of, renewable market and not coal generation through MISO. So I just wanted to point that out so everybody's aware of it, because if you start talking about a dollar, it doesn't sound significant, but it's $1 for them is $350,000 for us. So that's it.
Okay. Steve, do you have
Yeah, we did have a virtual meeting last week, just a couple of things to get through pretty quick. The IEC annual meeting has been canceled. There will, however, the IEC business and reorganization meeting will have a virtual one on the 7th of December. Earl Ridland presented the audit report. It's a clean audit with no adjustments made for 2019 basis for IEC. Carol White of Fulton County presented their youth director programs. I'm not so sure if anybody's reported on those before, but it sounds kind of neat. We may want to think about it at some point in time, at least talk about it if we want to kind of follow through. But Fulton County has 3 or 4 student director positions that, of course, are non-voting, but they attend all regular board meetings and participate in all events and functions. Carol White, they have up to 16 students that comprise a junior board where they have their own monthly meetings. They learn about parliamentary procedures and things of that nature. The benefits, students become ambassadors for the co-op, students become more engaged in the communities. So it's kind of a neat presentation. The components of the dues formula will be discussed in our next meeting, and they're going to look at things, I think, really close, because some of those calculations go back to the 90s. I'll have more to share hopefully through October. That's all I got.
Okay. Board accountability and strategic, did you guys have anything?
We have no report.
Okay. Broadband committee.
Brian, myself, Jeff, and Dale are going to have to get together. We got some things to discuss. Also, Viasat. Jeff had asked some questions on Viasat, and so I'm going to get everyone together on pricing with some options there. We're still kind of working through those details. So I do need to get with you 3 to see if we can get an open date in the next couple of weeks.
Move on to director training. I know several went to director training here. We put it into the boardroom over there. Does anybody have any takeouts they'd like to share? Takeaways?
Well, on the 6th was a very tree, we were talking about that, right?
There was at least 2
The
days.
6th and 7th, Friday. And I knew on the 6th, there was 3 times the director of the instructor said their director should be informed about who is on the advisory committee. So I wrote that down, and that's the reason why I was told that what I was doing. So I haven't been able to get back to that guy to find out about exactly what he said or if I was hearing things wrong. And so also, on the 7th, it was about financial stuff, and that director pretty well said, we need to get away from our rules, if you can. And that's the way I got it. Now, I don't know whether or not you guys received that, but I got that. The REMC is making some rules and things like that that we should not be have to adhere to. No, you guys take the lead. That's all I got.
That's not a, do we have a choice?
Yeah, we haven't borrowed from RUS and we don't plan to. It's all FFB. RUS's rates are much, I would say much higher. They are higher than FFB.
We've got some old loans with them, right?
Yeah.
No, that's right.
But the RUS accounting keeps talking about tonight, so that's not required on our part?
No, not only if you borrow
Only
from
if you
RMS.
get your borrowing new loans.
I mean, RUS and FFB are one and the same though, right? I mean, they're different, but yet they're still under the USDA.
It's the type of loan.
It's just the type, yeah. So FFB is new. RUS is can be. I think what he was referring to is there is definitely a cost to do business. It's just like CFC, right? I mean, there's paperwork that you have to do that's different, and it costs money to do paperwork.
Do we have any idea, are there any cooperatives that do not comply with RUS?
Yeah, they use CFC. Or what's the other one? Cobank.
Cobank.
50/50, 80/20, 90/10?
It's all over. I mean, folks are going more to being single, like so one borrower as opposed to more than one. But of course, you've got. I mean, we can't just do that tomorrow. But I know that a couple of our surroundings have gone exclusively to like CFC or Cobank. Did I answer your question there?
Good to look into. Anybody else?
Can I have a minute?
Sure.
Couple minutes?
Sure.
I've been a member, and this is just kind of my perspective, I've been a member of REMC for a little over 20 years. But until I was approached about becoming a director a couple years ago when Michael and Brian and I were elected, I had not really been involved. The one thing I consistently said, and I consistently see from staff, from members, from everybody, is the passion they have for the REMC. If that's not evident by the amount of time and energy and money that's spent on annual elections, I don't know what is. But with that being said, I know we seem a little bit, I hate to use the word divided, but we're certainly not cohesive in a lot of things we do. It's my understanding that 2 weeks ago, I think tomorrow night, there was a meeting of what I'll call the concerned citizens, concerned members, Mr. Peters, at your house. And you're nodding in affirmation?
I don't deny it, no.
Okay. And that a board member was present at that meeting. So I guess my question, in order to try to galvanize this energy that I see right now as convergent, or divergent instead of convergent, is that something that any board member would be allowed to attend so we can find out what issues are being discussed?
There's quite a bit of division. You know, am I allowed to talk?
He addressed you all.
Okay. There is a lot of division in this board. And I tell you, there's a lot of, let me choose my words properly, don't know if I can without.
I am going to limit to the questions that are asked.
No, I think the problem's a lot deeper than that.
I understand that, but we are at a board meeting.
Well, then I don't, let me say, if you're invited, you can attend and answer your questions.
So, am I invited?
I don't know if you are or not.
So it's not an open invitation, I mean, it's by invitation only.
Absolutely. Now, as far as the rest of it, I think there's a lot of issues and a lot of problems in this REMC.
I will agree to that. But
I know
we're
you
not
might
going to
just say,
discuss
but
those
I'm
right now.
telling you, there's a lot of policies. I sit here and bite my tongue when you go down to it, and I've read policies and I've read bylaws and so forth on there, and I don't know how to address them because I hear the things that we're not supposed to be talking to our directors, and directors are not supposed to be talking to members, and I don't know how to bring this up, and I'm not comfortable bringing them to Brett because I'm not satisfied if I brought them to him that it gets translated to the rest of you with the same accuracy or with the same concern that I would bring them.
And Kenny, have you ever brought any of those to me?
No, because you have never given me the impression that I could trust you.
Have you brought anything to me?
Yes, I have.
Like what?
We talked about the policy out there on my rental house.
And that got changed.
Yes, it did. But it was at a board meeting. But I tell you, it's just like coming with Suzanne. I understand her coming in. If I come to see you, I will come with witnesses or as a group. I will not do a one-on-one with you.
You haven't done a one-on-one with me.
And I will not.
Okay. We're going to move on at this point. I don't think nothing else on the agenda. So I will entertain a motion to adjourn. Steve? Is there a second? All in favor?